last year we put a deal under contract in Dallas, and then rates went up 75 basis points, and we didn't have cushion in our numbers, and we didn't feel comfortable going to our investors and saying, hey, this deal now is going to project 12% return or whatever it looked like, right? And we couldn't get a price reduction from the seller. We had no choice but to terminate the deal. The sellers confiscated our earnest money. We lost out on all that time and money, and we refunded our investors. So we gave investors their money back. They didn't lose any money, but obviously they lost out on investing in what would have been a good deal. And for us, it was a really bad swing because it went from buying a property, collecting acquisition fees,
being excited about growing a portfolio in Dallas,
adding a new property to the portfolio, growing the business, and instead we lost all that and we lost money. So it's really nasty to be taking these risks as a sponsor, but as a fiduciary to our investors, it's really, we have no other choice but to take these risks, and it's what we get paid for. So that's one interesting dynamic. The other interesting dynamic as far as treasury volatility that I want to share before we move on is the idea, I was getting to this earlier, then I got distracted by your retrade comment. Every day we put out offers, and we put offers out based on where treasuries are at that time. And we usually bake in maybe a 10 or 15 basis point cushion there, right? We want to have a buffer just because of the daily fluctuations of rates. It's very abnormal for rates to move 25, 50, 75 basis points in the span of a month. It's ridiculous. It makes it very difficult to transact. So we have to adjust our pricing on a day-to-day basis given treasury volatility. And so we're not alone in that. We're a buyer just like any other buyer who's doing the same thing. So it's just interesting the way that buyers react immediately to treasury volatility or moves in treasuries. However, on the sell side, as a seller, you're not going to be as willing to move your sales price based on the daily fluctuations of treasuries, right? You're not going to say, my property's worth $50 million, and then treasuries go up the next day and you say, my property's worth $49,750,000, right? A seller in their head thinks, my deal's worth $50 million.
The number is the number.
The number's the number, and that's what I'm selling for. And that's what makes kind of the disconnect between buyers and sellers occur, because buyers are adjusting on a daily basis, and then sellers are much slower to react.